Greece will not leave the Eurozone, at least for now. After marathon talks between European leaders agree to offer a third bailout, will pump in 86 billion euros only if the Greek parliament ratifies radical reforms on spending cuts and privatization.
Relief rally across Europe and the United States as Greece seals the bailout deal. Bond prices under pressure as equities regain some sheen.
Dalal Street also heaves a sigh of relief. The Nifty rallies nearly 100 points. The Sensex nears 28,000. Mid-caps outperform.
Former Finance Minister of Mauritius says renegotiated tax treaty with India will have devastating effect on Mauritius.
Inflation rears its ugly head. Once again, retail inflation accelerates to 5.4% in the month of July, the highest in the last 4 months. Food prices are the main culprit.
Setback for Vijay Mallya. Supreme Court rejects UB Group chairman's plea, empowers the Enforcement Directorate to initiate criminal proceedings in a forex violation case.
The Apex Court pulls out all the stops to recover money from Sahara, conducts an auction to sell the company's property in Gorakhpur as judges play auctioneers.
Fresh twist to the Yes Bank boardroom battle. Bombay High Court makes RBI a party to the case involving the appointment of 2 directors to the board.
General Motors recalls over 1.5 lakh vehicles. The Chevrolet Beat, Spark and Enjoy made between 2007 and 2014 recalled due to wiring problems.
Potential trouble for the Kane Vedanta merger. The monitoring wing of LIC rejects the merger plan, but a committee of managing directors will take the final call. That's an exclusive.
530 listed companies set to face the wrath of the Bombay Stock Exchange. Notices have been sent for not complying with SEBI rules and not appointing a woman director on the board.
After 17 hours of negotiations, we have finally reached it. We have an agreement.
A nominal haircut is out of the question for us.
All the democratic parties stated that they wanted to stay within the Eurozone.
It was also important. I'm happy if we save Greece. My real challenge, our real challenge today is to save also Europe, and this is the problem.
While some are equating it with the Treaty of Versailles, some are calling it a grotesque betrayal. Hashtag this is a coup is trending on Twitter. But Greece has a deal and Brexit has been averted, at least for now. Good evening. Thanks very much for joining us on India Business Hour. Surbhi joins us from Mumbai. Hi, Surbhi.
Hi, Shireen. What an evening. Well, we've got all corners covered on that Greek story today. In a few minutes from now, Nancy Hulgrave will be joining us from Brussels, where the deal was sealed. Michelle Caruso Cabrera from Athens, where not many are too pleased with what's been announced today. And Steve Leesman from Berlin, where the majority are hailing the deal.
All right, that's what we've got coming up. Let's go straight down to the top story tonight. It took a grueling 17 hours of negotiations between European leaders and Prime Minister Alexis Tsipras in Brussels to reach an agreement that gives Greece its third bailout package. And that makes it the longest summit ever. The total package is worth 86 billion euros. But let's give you the breakdown now. 7 billion euros could be handed out next Monday and another 5 billion by the middle of August. A $50 billion trust will be set up. Greece will manage the trust, and $25 billion from the trust will go into providing liquidity to Greek banks. But all this money will not come for free. Greece will have to undertake a raft of reforms to clinch this bailout. Now, here's a sample of what needs to be done. Streamline pensions, including a hike in the age, higher taxes, especially the ones like the value-added tax, liberalize the labor market, privatize the electricity network, among others. And even shops will have to be open for longer. So that's a long list of the reforms that Greece will have to agree to before it gets its hands on any of that money. But not everyone is happy with that deal. Nobel Prize-winning economist Paul Krugman has slammed the austerity imposed on Greece in an op-ed titled "Killing the European Project" for the New York Times. Krugman says the deal goes beyond harsh into pure vindictiveness. He goes on to say that this destroys the notion of national sovereignty and calls the deal a grotesque betrayal of everything that the European project was supposed to stand for. On the other hand, you have former U.S. Treasury Secretary Larry Summers. He's welcomed the deal in Greece, and like most influential market watchers and economists, he remains cautiously optimistic about the road ahead.
I think reaching an agreement was better than the alternative. There was no real viable mechanism in place for an immediate Grexit. Redenominations of currency are potentially much more catastrophic in their impacts than devaluations, and the experiment of losing a country from the European Monetary Union was not an experiment the world should have wanted to run. So I welcome the fact that there is an agreement, even as I'm acutely aware of the difficulties on both sides.
This is a really messy situation, and I want to take it to the practical side. There's this sort of who got the better deal, who did better, who did worse, but the practical aspects are the following. In relative terms, it's a good thing. In absolute terms, it's a total mess. And I'm not just talking about the economic and financial difficulties of implementing this, but the demand that this is going to impose on the institutional bodies are huge. And in addition, the politics, this is the return of gunboat diplomacy, so it's not easy to sell politically, and the social aspects are really complicated. So I think we should welcome and be relieved in relative terms, but markets should be prepared for an uncertain and messy implementation process.
I think what's maybe in some ways more important, I think there'll be a change in the political situation in Greece. The chairperson of the parliament is a hardline person totally opposed to the deal. I don't see that person continuing in power very long, and I think there will undoubtedly be some changes in the cabinet as well, and those are much more likely to be pro these various decisions that were enacted over the weekend than opposed to it. So I think it not only will be enacted, I think it will be implemented.
Well, influential opinion there coming in. Nancy Hulgrave joins us now live from Brussels. Nancy, hashtag this is a coup is trending on Twitter. Paul Krugman is calling it a grotesque betrayal. Opinions, as we've just heard, are seriously divided. We do have a deal today, but we still have a long way to go, is it not?
That's absolutely right. You can say the next few days are especially crucial as Prime Minister Tsipras gets ready to bring these new reform proposals back to Athens. And already a lot of anger, frustration from the Greek people who just over a week ago refused to vote for proposals that didn't go nearly as far. And these proposals we're looking at today are considered much more stringent. So it'll be interesting to see what the reaction is there. But I think what Mr. Tsipras has going for him is that he keeps saying there's very little other choice for them. We've seen a lot of pointing the finger at Germany, even Finland now, saying they've left us no option. And the Greek people are also really starting to feel the pain of what a potential Greek exit from the Eurozone would look like. Ever since that referendum was called and we've had the bank holiday and the capital controls in place, the situation has just degenerated there. So at the very best case, he can say, this is the only option we have. But that doesn't, we could still see lots of protests, demonstrations throughout the streets. And I think, as your guest mentioned there, the likelihood of a cabinet reshuffle at the very least is being talked about here on the ground. So we could see that in the coming days that would be more favorable to the reforms put in place. But not only have these measures on sales tax and pensions gone even farther, but it's also this agreement to bring the Troika back in to monitor the new standards. I think that will really upset the Greek people who fought hard against that initially. So lots of hard selling that Mr. Tsipras will have to do in the next few days. We have the vote on Wednesday, and then Germany will vote on the reform proposals as well. They're due to do that on Friday. And then hopefully we'll move a little bit closer to the deal. But for now, plenty of uncertainty. Back to you.
Right, Nancy, thank you so much for bringing us the latest. Let's now go across to Michelle Caruso Cabrera, who's joining us from Athens. Michelle, I mean, lots of criticism coming in, as we heard from Mr. Krugman there. So is it right to say that democracy in the Eurozone is actually sort of dead? Now Greece seems to be pushing through the same measures that they had rejected in the referendum, and also they elected a government going against austerity.
I suppose, I mean, if they could have made a choice to leave the Eurozone if they wanted to, I mean, the minute that you give up your ability to print your own money, you give up a part of your own sovereignty, right? Which is part of the deal that they all made and previous administrations made at this point. But we are starting to hear from members of the government. We did hear from Alexis Tsipras speaking Greek when he left the meeting this morning. But now we're starting to hear from some of his deputies as well, including the Deputy Minister of the Interior and also Administrative Reform, who, if these proposals really do go through, he's going to be exceptionally busy because supposedly they're going to do lots of administrative reform. He said it's a very tough deal, but they had no choice.
It was a forced agreement under tremendous pressure. We managed to conserve our sovereignty, and we have avoided the sudden death caused by the closure of the banks. That was something equal to a coup d'etat, as cogently has been already said.
Closing the banks was a coup d'etat, he said, essentially. By the way, the banks are still closed, and it's unclear when they're going to reopen. The ECB today convening the Governing Council, and they did not increase ELA. That means no more cash increases to the banking system. On a side note, I just want to highlight what the role of Twitter has been. Even as we watch Twitter struggle as a company, the role it has played in this process, just when it comes to the meetings, for example. There are prime ministers and finance ministers who I think would really rather have been wire reporters. For example, the Finnish financial minister, Alexander Stubb, tweets every single time when the meeting starts, Eurogroup begins, like he's letting everybody know. That's how we know, because he tweets it out. The Belgian prime minister was the first one. He tweets out during the meeting today, agreement. And then the official word, the first time we hear about it, comes from Donald Tusk, where he puts out a very official statement saying there's a unanimous decision that we have come to an agreement. I mean, Twitter has been truly instrumental in this whole process.
Well, they're making us redundant down there, Michelle. Thanks very much for joining us. Let's go across to Steve Liesman now. He joins us from Berlin in Germany. Steve, Alexis Tsipras is going to have to face pressure when he heads back home. It's being seen as Tsipras' capitulation. But what about Germany? How's Germany reacting to all of this?
This hashtag, this is a coup, has now been on 350,000 times used on Twitter. It's trending in France, it's trending in Germany, it's trending in Spain as well as the United States. And then earlier today, BBH put out a commentary about lasting scars. It appears to many that Germany overplayed its hand. The bitterness and vindictiveness of the German stance are bound to create lasting scars within Europe. And then a Green Party member to the European Parliament said Merkel, Schäuble, and Gabriel, that's the economics minister, have burned up the trust in 2.5 days that was built up over 25 years. Now, let me just point out, that is on the fringe of the commentary here. Overall, there's guarded and positive reaction when it comes to the politics here in Germany. Germans are saying repeatedly they're looking to Greece to fulfill these reform promises. A German government spokesman reacting to the "this is a coup" hashtag says Chancellor Merkel and the 19 members of the Eurozone acted out of European conviction and European responsibility. And then at stake for the Germans here, guys, is not just Greece, but the broader monetary union. This issue of whether or not there's going to be a hard or soft monetary union, one the Germans say is based on fulfilling promises, paying debts, and carrying through economic reforms.
Well, that continues to be the question, but at least for now, it's off the table. Steve Liesman, Michelle Caruso-Cabrera, and Nancy Halgrave, appreciate you joining us there from Brussels, Athens, and Germany. It's green across the screen, though, in Europe, because Greece has grudgingly accepted a reforms for aid deal, though, of course, the Parliament still has to ratify that plan. The German DAX closing about 1.5% higher, the CAC closing 2% higher, and the FTSE in London about 1% higher. Cheer in the peripherals as well, the Italian MIB, the Spanish IBEX, all up between 1% and and 1.5%. And similar story playing out on Wall Street. Major indices rallying in trade as we speak. Wall Street opens strong and continues to hold on to those gains. It's 1% higher on the three indices. But this is not the only deal that we're monitoring. The Greek deal seems to be done for now, but negotiations continue between Iran and Western nations to broker a nuclear deal. The negotiations between Iran and the six world powers have reached a make-or-break point. Officials warn that diplomacy could fail if there is no final agreement by tonight. In the event of a deal being reached, the focus should turn to the specifics and the diplomacy required to successfully implement the deal. A successful deal may result in some Iranian oil creeping out of storage in the interim. Al-Arouzi of NBC filed this report on today's developments out of Vienna.
It's day 17 of the talks, and it looks like the two sides are almost there in what could be a historic deal that's been in the making for almost 13 years. There have been ups, downs, and missed deadlines, but the language coming out of Vienna right now is very positive. The head of Iran's Atomic Energy Association, Akbar Salehi, said that the two sides were very close and all the technical annexes have been resolved. While Secretary Kerry said positive decisions have been made, good talks are going on, and that he's very hopeful. The Iranian foreign minister, Zarif, said that there's still some work to be done, but the talks wouldn't be extended beyond today. A clear indication that they're getting ready to make an announcement today or by the latest tomorrow. That's also backed up by the fact that all the foreign ministers are in Vienna right now. Now, there may be a little bit of navigating left to do, but it looks like it's a done deal. And I can also tell you that here in Tehran, social media and chatter is buzzing with positive energy in anticipation of a deal being announced later today or tomorrow.
All right, that was Al-Arouzi earlier. Now let's take a look at how crude markets are behaving. Well, crude has been trending down. However, it has recovered quite dramatically. Now we're looking at NYMEX actually in the green, and Brent is down, less than 0.5% in the afternoon. Crude oil was down almost 3% on the back of those concerns that more Iranian oil is going to hit the market as soon as that nuclear deal is done. Anyhow, coming back home to the equity action here, the debt deal in Greece also brought cheer to the Lal Street. The Sensex gained nearly 300 points. The index is now within kissing distance of the 28,000 mark. The Nifty also surged past 8,400, gaining nearly 100 points in trade. Shireen?
Well, that's the global and the Indian equity market action. But let's talk about the big macroeconomic story. And it's not looking good, Surabhi. Inflation has reared its ugly head once again, with a surge in food prices pushing retail inflation to a 4-month high in June. Lata standing by now to take us through the analysis. Lata, has this unexpected spike in inflation seriously impaired hopes of a further rate cut from the Reserve Bank?
Yes, it is a nasty number. The overall inflation number itself is 5.4 against expectations of 5.06. I mean, that's a good 35 basis points higher than market expectation. It's the fourth, it's the highest in 4 months, standalone, that 5.4% number. But within it, the food CPI is the worst number. That's come in at 5.48 versus 4.8 in May. And if you look at the internals, it's a little eerie. June prices always rise compared to May because it's the start of the monsoons. The movement of vegetables is restricted. But this time, June over May has risen by 2% against only 1.4 last year, same time. So the month-on-month increase in June is rather ugly. Vegetables is the worst. The month-on-month increase is actually 6%, even though the year-on-year number looks benign. Once again, pulses. The June level is 5.2% higher than what it was in May. This is just 1 month increase, which is rather bad. Again, with eggs, it is higher. Now, the consolation you get from all this is that it could be one-off as the monsoons progress. Probably the government will get a better handle. It will be able to import more pulses. Eggs, actually, economists say, is already started to recede. So that would be the positive if June is a one-off and if government steps start coming in and if the monsoon progresses better. But at the moment, this is a big worry. You should expect tomorrow bond prices to fall. The bond yield will try and reach out to 8%, probably turn at about 7.95. Bank Nifty will definitely get a knock. And the rupee will also be impacted. The dollar will get expensive. So basically, what Greece giveth, inflation taketh away.
All right, Lata, thanks so much. So we'll see what the reaction's like tomorrow, but it could be a dramatic one, particularly in the bond markets. But the government doesn't seem very perturbed about the spike in inflation. Finance Secretary Rajiv Mehrishi says that a good monsoon will push retail inflation down once again, since he feels that the structural inflation trend remains under control.
I don't think that it's something to worry about too much because it's not a major significant departure or significant upward movement. And I think basic, the structural change in the inflation is already under control. There might be a minor hiccup, but it's not something to worry about. And now even the rainfall is good, oil prices are low. So I think we'll see better movement next month.
Well, that's the government putting on a brave face, at least for now, saying that there's no need to worry on account of inflation. Now, Mauritius' former finance minister claims that his country has given up the right to tax capital gains. This has raised questions regarding the scope of the renegotiations of the India-Mauritius double tax avoidance treaty. Menka joins us now with the story. Menka, so he's being quoted as having said this. What do we make of this statement?
Well, Shireen, we've known for a while now that the treaty is being renegotiated. India has for a long time wanted an LOB or a limitation of benefits clause like the one we have in the India-Singapore SECA. But Mauritius media reports seem to suggest that this renegotiation between the two countries goes far deeper. A story by La Defi Media Group in Mauritius quotes the former finance minister of Mauritius, Dr. Rama Sitanen. Now, Dr. Sitanen is quoted as saying, and I'm quoting exactly from the article, so this is verbatim, "I am deeply shocked. The memorandum of understanding reached between India and Mauritius announced the end of the success of our financial sector." He goes on to say, "It is incomprehensible that Mauritius has agreed to amend Article 13 of the Double Taxation Avoidance Treaty with India. Mauritius will no longer have the right to charge capital gains tax." He then says the protocol will have a devastating effect on Mauritius. In a few years, growth will experience a rapid decline. Part of the offshore sector will disappear. Now, Article 13 is the article that determines the levy of capital gains tax in the India-Mauritius double tax treaty. It's not clear how Dr. Sitanan has arrived at this conclusion that Article 13 is being rewritten and the right to tax capital gains is being taken away from Mauritius. In another article, again a media report that I'm quoting, he says that he has come to know of these changes via detailed research and discussion with many stakeholders. Meanwhile, the Mauritius media has also carried reactions of current government officials. Roshi Baden, the Minister of Financial Services in Mauritius, has denied Dr. Sitanan's information. Mr. Baden has been quoted to say that, and again verbatim from the news report, investors have nothing to fear and that the new agreement opens up more opportunities in the sector. So, net, Shireen, it's not clear if Dr. Sitanan is right about the information he claims to have. Also, this information we understand is drawn from online media. So I'm not sure where he got his information from, and I'm drawing mine from online media reports in Mauritius. But I'll tell you this, the Indian tax fraternity is abuzz with these articles, and therefore I thought it would be useful to bring to the attention of our viewers that these are some of the comments that are going on in Mauritius.
All right, I can imagine the tax fraternity being in a tizzy over that. But let's go across to Sajid Menka because he has some information as well. Sajid, what are your sources at the Mauritius Finance Ministry telling you?
We've been talking to some of the sources close to the Finance Ministry of Mauritius. While the sources did not disclose specifics of the Indo-Mauritius tax treaty, they did give us a sense of what the thinking in the Mauritius government is. Firstly, they said that while something is not ratified doesn't mean it is complete. That means that both the countries are yet to sign off on the final details. On the other hand, he went on to say that the treaty negotiations will have to factor in a couple of issues, which includes global trend in double taxation avoidance agreements, how financial services regulations are moving going forward, how the Indian GIFC has been formulated, and OECD's base erosion and profit sharing concept. Aside of that, double taxation should be avoided at any cost. So these are the basic principles under which the negotiations would go on. He further went on to say that all countries are now looking at tax agreements which have created loopholes, and countries need to follow international norms or they will get branded as tax havens. What was the context 20 years ago when the Indo-Mauritius tax agreement was signed is not existing today, and so there is a very big case to relook at the entire Indo-Mauritius tax treaty. And LOB as a concept has been there in a couple of treaties, and it's a safeguard which is required. So this is a sense which is there in the Mauritius government as far as Indo-Mauritius tax treaty is concerned.
Okay, and Menka and Sajith, I'll add my 2 bits here. The view coming in from North Block. My sources in North Block are not saying anything at all, with the exception of saying that the DTAC is in advanced stages of negotiations and it's expected to be finalized in the near future. So we can expect an announcement, or at least that ratification of the treaty agreement very shortly is what we're given to understand, but nothing on specifics on any of the issues that we've just discussed here. So I'm not even going to get into the speculation, but appreciate both of you joining us. Well, with that, we're completely out of time here on India Business Hour, but remember, do stay tuned to the market action right here on CNBC TV 18. It is going to be another exciting day. We're going to react to Greece. We're perhaps going to react to what happens in Iran overnight, especially as far as oil prices are concerned. And of course, stay tuned for all those developments right here.
Greece has not quite been bailed out yet, and the Chinese stock market bubble has not quite been pricked yet. How are Indian shares being viewed in these uncertain global times? We asked Pramod Gubbi of Ambit Investments and Kuriko Nuruki of JP Morgan Asset Management.
As always, IndusInd Bank has pleasantly surprised with their Q1 performance. The management will join in to tell us what's sticking for them.
Food prices normally rise in June, but even going by the normal trend, the food inflation this June is particularly ugly. What hopes are left for a rate cut? We ask Rahul Bajoria of Barclays and a bunch of bond experts.
After TCS posted a lackluster set of numbers this quarter, are other IT companies set to follow? Moshe Khatri of Cowen & Company will join in to give us his view.
All that and more coming your way on Bazaar starting 8 a.m. tomorrow morning.